Yep. Ladies and gentlemen, welcome back to World Cargo Summit 2021. Let's continue. And first, I would like to show a small video from one of our sponsors. Please.
Delivering health all over the world. 3 airlines, 1 mission. We're Volga Dnepr, a leading group of cargo carriers that has been providing logistics for a variety of industries for more than 30 years. Our mission is simple. We strive to help people all over the world live happier and longer lives. Now more than ever, we are committed to supporting your business as we live through this global pandemic. The global public health crisis has created an increasing number of challenges for individuals, families, communities, and businesses. COVID-19 is affecting nearly every country on Earth. What's next? More than 150 pharmaceutical companies across the world are racing to find a vaccine that will ease this global crisis. Several efforts are underway to help make a vaccine a reality and deliver millions of doses in the fastest and most secure way. Delivering vaccines to all corners of the world is a complex process. It takes a highly coordinated chain of events in a temperature-controlled environment to store, manage, and transport life-saving products from manufacturing up until the moment of vaccination. We're proud of the expertise and experience we've been able to gain as a reliable, long-term logistics partner to many healthcare providers around the globe. Our dedicated pharma service offers the best possible solution for innovative healthcare logistics that deliver. Now, how do vaccines get from point A to point B safely? Once vaccines are produced, packaged, and ready for shipment, they begin their journey aboard a road feeder, a truck service that transports the cargo to its nearest airport of origin. Temperature-sensitive goods like vaccines are kept in refrigerated containers at all times. We offer a wide range of different containers that transport your cargo at a constant temperature level. To guarantee an uninterrupted cold chain, we have developed a dedicated infrastructure system and offer ground handling facilities as well as the expertise of our logistics personnel across our entire network. Our fleet and certified crew offer multiple benefits to customers, including a safe delivery process, exact temperature conditions, and optimum shipping quality. Once at the destination airport, we coordinate for a successful final delivery. No matter how complex a shipment may be, we are ready to deliver the COVID-19 vaccine, all in full compliance with our high-quality standards, including IATA PCR Chapter 17, IOSA, and Cargo IQ. Most of our worldwide stations are CEIV or QEP certified. Our dedicated vaccine task force has implemented a 360-degree strategy to leverage vaccine flows in collaboration with the pharmaceutical industry and other stakeholders. It's a journey of moving life-saving supplies that can fight the virus and reduce negative human impact. Because your mission matters to us.
Thank you, Volga Dnepr Group. Okay, let's reconvene. It's time for the highly exciting panel, World Trade and Air Cargo Market Trends. So we will move on to Frankfurt. And Joachim von Winning, he's Executive Director of Air Cargo Community Frankfurt. And he will present 3 excellent speakers. So if you are a market analyst, this is something for you. Okay, Joachim, welcome.
Good afternoon, good morning, or good evening, wherever you are listening to this. I'm Joachim von Winning, and I'm sitting in my home office right outside Frankfurt. And I'm really thrilled to answer a question that Mr. Lim from Changi Group in the previous session said probably is the question most asked during these 2 days, which is when will we be back to normal? Now we have the right panel to address this question. The name of the panel is World Trade and Air Cargo Market Outlook. And I'm really happy to welcome Ludwig Hausmann, partner at the Munich office of McKinsey & Company in Munich, I presume. We have Neil van der Wouw, Managing Director of Clive, and Charles Schlumberger, Lead Transport Specialist of the World Bank. And I think you're sitting in New York. That's the World Bank right behind you there, isn't it? Well, we will make it the way that all three of the panelists will have a short presentation focusing on the different aspects of the market outlooks. And it's my great pleasure to first ask Ludwig Hausmann as a partner. He is a specialist for transport and related topics, works a lot on air cargo as well as airlines. And ask all of the panelists, except for Charles, and you'll find out why, to give a bit of fun fact. And Ludwig actually played football in an aircraft just before it was delivered with a mechanic. So that is interesting. I mean, I love empty aircrafts, and you played football in one. Wow. Now, Ludwig, handing it over to you, I'm interested on your general economic market overview.
Thank you, Joachim. Great to have you, and welcome everyone to this session. Let me start it off by sharing my screen, and I'm going to briefly talk about a few observations that we at McKinsey have on this market. It's going to be quite quick and very pointed. Let me go on full screen. If my laptop lets me, I think, here we go. So yeah, it's been a turbulent year. Probably the first half of the day today was already discussing around all that's been happening. We see basically 4 key takeaways on air cargo in 2020 and beyond. First of all, yes, extraordinary year, likely continuing this year and beyond. I'm getting into that and how long we believe. Undercapacity is again lasting at least until end of this year, and there are some kind of factors that could even prolong that. Cargo obviously remains crucial for supply chains. We have a view on kind of how demand verticals will do, but also how the different participants in the air cargo value chain, from forwarders to carriers to airports and other players are reacting right now. Obviously, one of the growth vector is e-commerce. I'm going to talk a bit about the opportunity for air cargo here, and then digital. That will close it off. So let me go into a bit of a summary first. So the tremendous year for air cargo last year in numbers. We have a transported volume that dropped by 15%. Across all trade lanes across the entire year on average. So that doesn't say that, for instance, outbound China, we even have seen increase, but that's kind of the global view. Capacity dropped by 30%, all the belly that hasn't been kind of recovered. Yields on average went up throughout the year by 30%. Again, that doesn't tell you that that was the case everywhere. We have seen trade lanes where average yields were 50-80% above 2019, and for some months even 2-3x of normal. Revenues of the industry plus 11%. So our air cargo industry has grown in revenue despite losing 15% of the volume. Load factors at record level. Some freighter airlines are gonna announce EBIT margins that are in the territory of software providers, 32% last year. And even the forwarders managed to almost keep their gross margin despite all the talk and complaint about basically the capacity price explosion. Now, if we look forward, and I'm kind of admitting that this might look at as a bit of a complicated slide. We at McKinsey have scenarios for kind of the macroeconomic recovery, and there's one scenario, the top line, which is kind of the scenario most likely right now, where we are in a strong second wave of virus recurrence, but kind of expect basically the health measures and vaccination to kick in, and therefore by the end of the year lead to a significant return of the belly capacity. Then below that, we also have a scenario where macroeconomic indicators go up, but we still are not seeing passengers returning to long-haul air travel as much as kind of the economic development would suggest. So not correlating to economic growth, but rather kind of having a bit of a lag in terms of recovery. And these two scenarios have very distinct impact then on the supply side of air cargo. So the supply belly, you see that in the curve, is especially towards Q4 this year and then early next year, going much faster in kind of the more positive scenario, much slower in the more negative scenario. And on that basis, we also see how much supply, i.e. air cargo capacity, we could expect in the next quarters and then in a year from now. And the key difference is that in the lagging belly recovery scenario, we have an undersupply that continues right up into the year 2024, which will have a yield development curve rather on the top slope in this very kind of transparent market. If we see belly capacity kicking in quickly and all the freighter capacity is staying online, then we will see break even already early 2022, which means in 2022 we will be back on a yield trajectories that we have seen until 2019. So that's basically what we are seeing. One extra note here, the COVID vaccines, a big topic for air cargo. They are actually marginal. So they will kind of not even fill 8,000 dedicated planes, but rather be co-loaded also due to the restrictions in dry ice and so on per plane, and rather be a filler or kind of be a small chunk of what's flown than really moving the needle on the demand. The demand, what you see here, we expect around 90% of 2019 levels in the first half of this year, although some spikes due to protective equipment and other kind of container shipping shortages will be there. And then towards 93% in the end of the year and crossing 2019 levels next year. Now, what has kind of been the reaction of stakeholders along the value chain? Shippers have secured capacity in more block space manner, especially shippers of high value goods like Apple. And they have increased, and we see that through our consultants working with shippers, increased budgeting for transport spend this year, because they just know they want to grow again and sell their products. They have to live with higher transportation costs, both in air and ocean and even road freight. And there are some modal shifts where we see kind of rail cargo picking up, winning against ocean freight, and some even spill over into air freight. And then e-commerce giants increasing their chartered own fleet by quite a bit. For forwarders, we also see stronger long-term commitments and even charter activities. However, that is rather kind of short and mid-term. For the long term, everyone is, at least right now, claiming that they will go back to being brokers for capacity on the spot market. And also some modal shifts there. Cargo airlines obviously try to maximize their capacity, most block hours possible, reactivating aircraft. And now we see even some uptick in conversion activities. Obviously also the freighter operations of passenger airlines that, as we see them, will, however, only be a break even in very distinct lanes on very distinct commodities. And spot bookings gaining importance. the GSSAs are kind of right sizing but also increasing the sales teams, because the pure belly airlines that are kind of, due to their passenger business, in big trouble, they often cut into the cargo units and rather want to outsource sales. So that's what we see. You all know about the other transport modes, so I'm not going to stick to that for long. A couple of last charts. One is on the e-commerce opportunity. So what you see here on the left-hand side is the e-commerce shipments, as kind of parcel shipments crossing borders, have outgrown the domestic e-commerce shipments for all years but 2020. In 2020, they still grew 5 to 10%, but the reason they didn't continue the trajectory of outgrowth of the domestic was purely because of the capacity shortage in air freight. So 90% of all cross-border e-commerce parcel shipments are carried by air, and if kind of the postal channel doesn't get access to the expensive cargo capacity anymore, if even some of the express players are not finding enough air uplift anymore, it was just difficult to sustain that level, because e-commerce is rather a low yield commodity, but it's volume-wise very important. Therefore, we also say on the right-hand side, by 2022, it will be 20% of the air cargo trade volume and at least 12, 13, 14% of the air cargo revenue. So an important new field that works distinctly different. The value chain looks different. Forwarders are not the prime source of volumes, but rather postal companies and e-commerce giants. But that's definitely something for the air cargo industry to look out for and adjust, develop suitable products, etc. Now, last comment on the digital leap. This curve is just representing the e-bookings on the Freightos web cargo platform. And you see kind of since May, when basically all big companies, shippers and forwarders have pivoted from offline transactions to working from home, to having kind of digital as possible processes. We also see online transactions skyrocketing, and we also heard this year very good, and last year very good traction on the online channels of, for instance, Air France KLM Cargo or Lufthansa Cargo, and obviously the main one of the main booking platforms next to Freightos, Cargo.one, also raised a big round. So that's just a symbol of the digitalization that takes place in all processes, in all companies, but will only accelerate in the years to come. And with that, I would hand it back to Joachim. Thank you.
Thank you very much, Ludwig. Interesting insights. I'm now quite interested in how Neil is going to expand on this one, because he is the managing director and co-founder of Clive Data Services, which is a real-time analysis software for the global air cargo volumes, capacity, load factor trends, etc., etc. And he is been in the business for ages. He actually financed his studies by building pallets for KLM Cargo. So air cargo probably is in your bloodstream, and I'm quite interested in what kind of further, more detailed information you can give us about how last year was and what we are looking at.
Joachim, thank you. Thank you, everybody, and good day to all attendees. I will follow up briefly on the annual assessment that Ludwig just presented. And let's have a look at the last few months, weeks, when we look at 2020. And what we see here are the blue vertical bars are the demand growth week over week since May 2020, right up until January 11 to 17 of this year. So about 10 days ago. And we see that overall a gradual recovery in volumes. When we hit the peak of the COVID issue in March, April, there were many discussions. What kind of recovery will we see? Will it be V-shaped, U-shaped, bathtub-shaped? But we actually see a less sexy but a gradual path to recovery. When we look at the two lines at the bottom, they represent the year-over-year demand growth and year-over-year capacity growth. And what clearly shows there that the reduction in capacity outpaced the reduction in demand growth. And if we look at the last 4 weeks that we have, so let's say mid-December up until early Jan, and we actually see a positive growth again. But I would have to say a disclaimer here that because of how the holidays fell this year relative to last year, it might be skewed. But what we can see is that the drop in volumes that we saw after Christmas up until early Jan were less pronounced than they were last year. And therefore, again, proving the resilience that air cargo has seen in this remarkable year 2020. Well, you also see, because the orange line at the reduction capacity was larger than the reduction in volumes, the load factors went up by quite a bit. Before I come into that, the capacity reduction. And there we see a clear distinction between all known the freighters and the belly capacity, where we saw up to 80% reduction of belly capacity at the peak of the COVID crisis, March, April, and then again this gradual path to recovery. Where we do see that as of November 2020, we've seen a kind of a stall in that recovery process when the second COVID wave started hitting many countries. Ludwig just clearly elaborated on the prospect of this belly capacity coming back into the market, which is surrounded by a lot of uncertainties. One element I would like to add to that analysis is, if you would look at the passenger flights that are being flown around at the moment, there is hardly a passenger on board. Cargo is paying for those flights. But a result of no passengers or hardly any passengers being on board means that the full belly capacity of those planes are available to cargo. And if we take an Airbus or a Boeing twin engine aircraft intercontinentally flying, we could see often 10 positions maybe being available for both the baggage as well as cargo. Now we see those 10 positions being fully attainable for cargo, while generally it might have been a 50-50 split between passenger bags and cargo. So what we will see with the very low passenger load factors, so the moment intercontinental passenger traffic will come back with the low load factors that we see on the passenger side, initially the cargo capacity would further drop, because before airlines will start to upgauge their aircraft or increase their frequency, they would expect to first fill the flights that are currently flying. And therefore you would expect more bags and therefore less capacity to cargo. So we expect that the return in capacity from passenger flights first will take a little dip once more passengers come on board. And then, of course, it will resume to higher levels, depending on how popular intercontinental traffic will become in the quarters and years to come. But like I said, it will have a negative impact initially with more bags taking up the space of cargo. The reduction of capacity globally and cargo demand not falling as hard has resulted in, as Ludwig said, record level load factors. And there is a discrepancy between the numbers he shows and the ones we have here. And that's mainly due to the perspective. We look at both the volume as well as the weight utilization of aircraft. And if you consider those both elements, we saw a record late 2020 of a global load factor of 73%. And that is a level we have not seen since we started recording as by May 2018. And for those of you not too familiar with the topic, let's put that into perspective. Cargo moves in one direction. It moves from A to B, and then maybe from B to C, what have you. But it's not like on the passenger side, where you have passengers flying from A to B and then back from B to A. Because of that and the trade imbalances that we see globally, we analyze that what we believe is a theoretical maximum cargo load factor to be around 80%. So if you take all the front haul and all the back haul flights and you combine them and you stuff all the front haul flights to the brim, you will get a maximum around 80%. So that 73%, which is very close to that 80%, means that flights around the world have been very full, especially the front haul leg. And that's not just on a single lane. We've seen it around the globe. This is something that we provide to TIACA members on a monthly basis. And this is the dynamic load factor for the month of December 2020, where you see for each table, if we look at the top left, so we see from North America to Europe, there was a dynamic load factor of 70% for December, which was an increase of 13 percentage points relative to December 2019. And so the green...
Interrupt?
Yes, of course.
Seems that the slides are not shared anymore. I see it on our Zoom meeting, but currently it's not broadcasted. So if...
if I look at my screen, it says that I'm sharing.
Yeah, I can see it on our speaker Zoom meeting, but it is not on the World Cargo Summit website. Somebody could join us.
Could I do a new share?
Yeah, please try. Okay, our technician isn't working on it, so I'm terribly sorry for that. Maybe while he's working, one quick question. How do you calculate the capacity? Because when I asked the head cargo economist of Frankfurt Airport to calculate capacity, gave me about a 2 hours lecture about why you can't easily calculate it from the flight plan and things like this.
We don't calculate it ourselves, but we receive the data from the airlines from which we serve, and there we can see for each single flight, based on their called weight and balance system or their cargo booking system, what the capacity was of a single flight from a weight as well as a positions or cubic meters point of view. So we approach it from two angles, both the weight and the volume. And whichever of those two elements is the most constrained, based upon that, we determine the dynamic load factor.
Right, because I understand that there's a lot of differences between if it is flying long haul, short haul, load factors and stuff like this. Okay, now we have the screen back a bit smaller than usual, but maybe you can try to continue, I think.
So Johan, when was the slide lost? Was it on this slide or was it the previous slide? Should I go back one slide?
Yes, please.
Okay, so this is the weekly global load factor. If the slide is now available, global load factor back until May 2018, and where we can see we highlighted the peak season that was in 2018, which was pretty good, and less so in 2019.
At the stream, apparently, it's just now it is there. Okay, sorry, you can continue.
Yeah, so you can see how the high load factors that we saw in 2020, how they relate to previous peak season. So we didn't have much of a peak season here, but it's more a peak plateau. It's been elevated load factors throughout the year. And it's not just on an average basis, but all over the place. Hopefully, this global overview is now available to the attendees. This shows you the dynamic load factor, which considers both the weight as well as the volume utilization of planes for the month of December 2020. And in each table, you can see what is the load factor now and how does it relate to the load factor of last year. And you can see here on many lanes, especially lanes where a large part of the capacity is being provided in passenger services, as the North Atlantic and the South Atlantic, you see a dramatic increase in load factor. And that's where demand and supply comes together. So when we look at the rates, these are courtesy of the TAC index, and we can see that Europe to the United States, for the last couple of weeks, rates are nearly 3 times as high as they were for the same period last year. Greater China to the United States, double, etc. So we've seen, because of the elevated load factors, we've seen elevated prices throughout the years to levels which were will have caused quite a few discussions in the air cargo value chain. If there's one thing 2020 learned us, there are no certainties. But what might 2021 bring? Again, there was a bit of noise a couple of months ago that the air cargo industry would be turned upside down because of the demand for COVID vaccines. But then several studies from different firms, and also confirmed here by Ludwig, that the volumes are not going to disrupt the industry. They are low single digit relative to the other demand. So that's not going to happen. That passenger business will recover rather slowly. There's still a lot of uncertainty, and with that returning slowly, we'll see belly capacity below pre-COVID levels for another few quarters. Again, unusual for this year is that at many airlines, the cargo department is now calling the shots. Was cargo the free rider, or perceived the free rider up until recently on passenger flights, with the passengers paying for the flight and cargo piggybacking on that? Now it's definitely the other way around. Cargo is paying for the flights to be operated, and without substantial cargo loads, it's just not sustainable, even in the short term. And based on that, we would expect airlines to continue closely matching their network to the cargo demand out there, and therefore we foresee that the high load factors will be the norm, at least in the short to medium term, and therefore likely keeping rates at elevated levels relative to what we saw in 2019. And that combination of high rates and uncertainty, volatility, that's a toxic mix, especially for shippers, but also for forwarders and airlines. So how do you combine your short-term and your longer-term deals? What's the balance there? So a question we have is, will new risk management solutions like the freight forward agreements or the index-linked agreements and that are arguably still baby steps, but they seem to be gaining momentum. With Freight Investor Services being active on that, the Baltic Exchange being very active in that, to see if that kind of risk management solutions will be more embraced by the industry than we have seen so far. And on that, Joachim, back to you. Thank you.
Thank you very much, Neil. And I personally like the sort of paradigm shift from passenger to cargo that we're leading in the industry at the moment. Let's see how that is going to develop. Now, it's a great pleasure for me to introduce Charles Schlumberger from the World Bank. He's been the leading air cargo or air transport specialist for the World Bank for a lot of years. We personally met the first time about 10 years ago during the Arab Spring in Cairo, where he handed out a dough and I was part of the team trying to bake an airport out of it. And I think we were some kind of successful. It's a nice airport now. And fun fact about him, he always claims that he's from the poor branch of the Schlumberger family, the ones who went to go to be bankers in Switzerland rather than go to the US and produce oil equipment. So this is handing over to you, Charles.
Thank you very much, Joachim, for your kind introduction. Let me set up here my screen. So. Do you now see the presentation?
Unfortunately not.
It should come on. Well, okay, but it still says you are viewing Neil DeVaux's screen. I think that is the problem, that we are viewing another screen.
Now Neil left his desk. There it is. Neil, could you unshare? Thank you.
Okay.
I apologize everyone for the technical hiccups. We'll get it done.
Okay, but okay. So I'm still sharing the screen, hoping that the presentation pops up. But so let me give a second until that. Okay.
There we are. Wonderful.
Okay.
Go ahead.
So, good afternoon, good morning, ladies and gentlemen. My name is Charles Schlumberger. As introduced, I'm the lead air transport specialist at the World Bank since about 22.5 years. And I'm greeting you here from my virtual office, Washington, D.C., which is exceptionally relocated to my home country, not far away from the Alpine city or village of St. Moritz. We had nearly 2 meters of snow, and today the temperature is warm at -7. We had -27 when I arrived a few days ago, but I choose this location against Washington, D.C., where it is a bit cooler and gives them a bit more freedom to work on different projects. I also would like to stress the point that today I'm making a presentation on behalf of the World Bank, but I'm not an economist, I'm actually a lawyer. And with this, let me give you a disclaimer. I'm presenting today several materials and several information which is on the public domain. Any conclusion that we draw out of this is not necessarily the World Bank's conclusion or statement, but is individual. With this, the question is aviation, and that includes cargo, rebound or reset. And for this, okay, let me try to move it forward. For this, I will look at the aviation sector at large, because a lot of cargo is transported in bellies, as we hear it. Just to summarize where we are today, we had minus 60% passenger traffic and therefore much less aircraft. We are analyzing, we have developed actually a tool to analyze air traffic based on capacity and actual flown flights. And it is flabbergasting how low the traffic still remains. And that is capacity missing. Therefore, of course, load factors are very, very high. So the question is for forecast. And we have here the latest forecast out of literature right now is that we basically have several scenarios as usual. The mean scenario for passengers is that sometimes early 22, we are back to where we were in 19. In freight, that should be mid this year. Again, that's a forecast out of literature. We see there are also, for instance, the US passenger recovery scenarios, different levels. We tend to be at the lower level, in fact, than what was planned. So the question really is, what will it take that our industry is coming back, our aviation industry, our air cargo industry at large? And let me look at three things. We need to end the COVID-19 pandemic. The markets must return. And here the discussion usually ends. And everything will be like before. And I have this notion with the 3 E's, and not just for this conference, for a long time, the economy, energy, and environment. Now we'll do that very fast, given in only 10 minutes. We know it, we have a vaccine, it started to be deployed, there's lots in the press. It is, for vaccine, very, very effective. And that is interesting, that's a big chance. But how do we deploy it actually right now? Well, the only country that has so far reached 30% of its population is Israel. But if we look at all the developed countries, we are far below 10%. The other question is, and I just discussed that yesterday with a professor of epidemiology, even if we are vaccinated, it is not sure that we cannot get the virus, not get sick, but then infect other people. If that's the case, it will not be over soon. That we will maybe know in the next couple of weeks, but that is a big question. And then, of course, will people vaccinate themselves? In Vietnam, there's nearly no question. Over 90% want to vaccinate themselves. But in Lebanon, on the other extreme, we have over 50% who will not, definitely not, or probably not. And the mean is somewhere between 30, 40% sometimes that don't want to be vaccinated. That in combination with the slow deployment is more prone to not be a quick solution. Now, the question for the aviation sector also is, will we have a change in customer behavior? Will we sit again trapped in economy class? Or will we say, I'm not flying around the globe, but I'm renting an RV and then going to the north of Germany, where, from middle of Germany, and have a good time? That is a question, because that will affect economy class. The other question, of course, business class travel, will it come back? Interesting study done by Harvard is that with the lockdown, people actually work more, not less. A lot of people say, at home you do. No, it is a very detailed study interviewing 3 million people, confirms that it is nearly between 8 and 10% more productivity. That, of course, is an important argument of not traveling, but working from home. So the contraction of the economies around the world is brutal. Since the Great Depression, we have never seen such a contraction. Many countries at minus 10% GDP. The question is how we get out of it, and that's the answer. Money supply. That massive amount of money supply. Now, in the airline industry, we are right now, the latest count we did, at about 176 billion of proposed or already granted support to airlines. They come in different forms. They come directly as grants, as loans, as guarantees. Interesting, about 41% of this support in the United States alone. That is possible because money printing is possible. What does that mean? Well, look at that chart. That's the Federal Reserve balance sheet. Until 2008, we were about at $800 billion money out balance sheet. Then came the crisis. It shot up to 2 trillion. People were really shocked. How can you print so much money? And no inflation happened. Then there were the good times where they came up till 2015, close to 4.5 trillion. Now they started realizing that's exaggerated. It declined and COVID came. At COVID, we surpassed 7.1 trillion, just the United States dollars. And with the Biden announced future stimulus will be more at 9.4 trillion. So in the last 11, 12 years, we will have tenfolded the money supply through the Fed. Does that have an effect? Does money supply have an effect? Well, if we look at a global basis, and I didn't have a chart here, so I just want to summarize this. The 4 largest economies and financial economies, England, Japan, the US, and Europe, have increased their balance sheet alone in 2020 from 16.5 to 25 trillion, and it's expected to go to 29.3 trillion. The increase alone of 12.8 trillion represents about 30% of their cumulative GDP. Or in other words, to make it more simple, of all the dollars in circulation today, 21% were printed in 2020, when we had actually contraction of the economy. Does that create an inflation or not? Well, the inflation is seen in the Dow Jones. We know we are now at 32 price earnings, which is double in what it should be. We saw it in the real estate market. The question is, are we in a bubble? And I don't have time to go into it, but if you are interested, go back 100 years. 1918, Germany started printing money like hell, and there was no inflation. 1919, there was no inflation. People then started spending a bit, little inflation, they stopped. And only then in 21, 22, when they said, now the roaring 20s are coming, inflation exploded. Why? The answer is velocity. Velocity of money, how much it turns. I don't have a graph, I didn't have time, but velocity is at 1.1, which means money doesn't turn. It is parked in the stock market, it's parked in real estate, in gold, you name it. The moment the good times come back, if Weimar repeats itself, we might have hyperinflation. We might not. The question really is, is it this time different? Are we in a new paradigm? New paradigm, first time used 1850 when America started railways. I heard it with internet. Are we now in a new paradigm that we can print our problems away? The second E is energy. Oil is abundant. Oil is cheap. There's no question. But remember, May 2014, when the oil price was at 148 a barrel, we saw a decline of the oil price and the jet fuel price over the years. And everybody is happy. Why did we have this decline? Is it sustainable? The answer is shale oil. Shale oil really started to take off after 2008, when the United States started shale oil production. Before, there was no shale oil. But conventional oil, the cheap one, and even deep water remained flat. It actually peaked. But America did a miracle and increased its production from about 6 to 12 million barrels daily. But the rig count is down 40%. It is absolutely clear that by mid this year, America will produce 7, not 13 million barrels. In other words, we will be missing 5 to 6 million barrels in world oil production. And you can't just shut it up again. It will take years to come back. If the economy comes back and you are missing 5 of about 80 million barrels used daily, you're missing 6.9% of oil. What does that do to the oil price? Well, why did they stop? Oil production, shale oil production was such a great invention. First patent, 1896, nothing new, was never profitable. And I don't even speak about profits. As a banker, I'm interested in cash flow. It is an open fact that shale oil production had a negative cash flow of over $200 billion in 10 years. And why is it financed? Too much liquidity. So oil, energy is another E we need to have on our radar. And the third one, and I'll close with this, is aviation and the environment. I'm absolutely flabbergasted about a bad reputation we have. Mea culpa. I do the Uber test. Whenever I'm in Uber, I ask the driver about, climate change and aviation, about the average pollution that they estimate population. 60% of all greenhouse gases is produced by aviation, according to Uber drivers or population at large, while it is 2.8%. What we don't talk about is that, in fact, if we would all stop eating animal-based food, 12% would disappear. 12% is agriculture, livestock. We don't talk about this. We only talk about aviation. Aviation is a very important sector, as we know, but we need to defend and promulgate what we are doing. Because if we wouldn't have attacked aviation fuel consumption, we would already be at 5%. And we are pretty much steady between 2 and 2.8%. So the environment is something we really need to take serious. So let me just finish by showing you the official forecast of IATA. And we ask ourselves with what I just presented, these 3 years, if that is, these forecasts will happen, will not. Again, we don't have an opinion. We just show you, if you want, the doctor would show you the lab reports and then ask yourself, well, is it doable? Will GDP rebound at 5%? Will world trade rebound at 7%? That is the big question. And with this, I'm closing. Thank you very much.
Oh, thank you very much, Charles. Now, I'm a bit puzzled now because from the first two presentations, we learned that, well, capacity will stay scarce and there's maybe even a decline in capacity because of more utilization of passenger aircraft with actual passengers and baggage with it that limits the uplift that we're having on our intercontinental routes, especially. We had a bit of an outlook that demand, we don't know, but it looks a bit stable, lifting up depending how world economy develops. That means everybody who actually owns full freighters and flies full freighters will earn quite a lot of money over the next years because the yields will stay high. And then you, Charles, come around and you tell us, we don't know. It's not that simple, is it? Right, we actually already nearly at the end of our segment. Thank you very much for the presentations. They were apparently as good as there were no questions in the chat from the audience, but I'd like to sum up our small group here before I hand over to yourself. Is that we actually had in August a real live event where we had half of the people in Frankfurt at the Air Cargo Conference and the other half was online. And I did a small benchmark and the KPI that was really intriguing to me was, although we had half the people compared with previous year, we drank double the amount of beers. So which is your next conference? Let me start with Ludwig.
I actually don't know yet. There are probably some virtual coming up, but I wouldn't know if there's a in-person conference coming up in my schedule because I'm really looking forward to that. So the next one will be the one where we can gather in person, hopefully soon.
How about you, Neil? Anything coming up?
Nothing planned, unfortunately.
And Charles, you even retreated back to Switzerland, I understand. So, any plans to fly back to your normal office or any conference at all?
Well, I was in Central America and Dominican Republic over New Year's, but there I was the only human being on the aircraft flying it myself. But the missions right now are all virtual. That means going to Nepal, going to Grenada, going to Congo, everything online, and it's remarkably easy. So another argument where the bank will also save in air travel.
Forward to that. So the next one will be the one where we.
To conclude, once again, thank you very much, Ludwig, Neil, Charles, for giving the insights. Very interesting presentations. Again, I stay back a bit puzzled on what to expect of the future, but I know in air cargo, our jobs will be safe for the next few years at least. We'll manage it. Hopefully we have real person meetings in the near future. We plan to have the Air Cargo Conference again in August and the World Cargo Symposium in October in Istanbul. Hopefully we can finally have a beer together. Anyway, goodbye, and from Frankfurt, have a nice week.
Thank you, Joachim. Goodbye, everyone.
Okay, thank you very much, Joachim. Well, I would love to come to Frankfurt in August and join your conference. I really hope that it will be possible. I would love to go back to Frankfurt. It's a very nice place. Thank you so much, guys. Okay, now we take a small break and we reconvene 5 minutes over the hour when we will listen to the panel, How Should Airports Navigate in a New Market Reality? Thanks.
Stephen, it's good to